Hi, this is Joseph. It's Wednesday, October 9th, 2013, and I wanted to review with you a trade that I took in with my trade copier program, but I also called it out live in the chat room. That's also a bonus for the trade copier program, and it was on the pound yen. This was the 30-minute time frame, and I want to explain why I took this trade as opposed to a couple of other trading opportunities that I had at the time. So if you're considering using the trade copier, you're probably wondering, what kind of stop loss do I use? What's the drawdown? And do I trade the news? Will you be getting the same fill that I get? And that really depends on your broker, first of all, because some brokers during news events, even though they tell you that you can trade the news, what they will do is in some cases widen the spread so that you are not, sort of to discourage you, so that you're not interested in trying to trade, because if you're looking at a maybe 17 pip spread, that maybe they don't want you to trade that particular news event. That is a possibility. The other option, or the other thing that brokers will do sometimes during news events, is they will just simply freeze the price feed. Even if it's a live account, they'll just freeze everything that you see, so you don't know when you're actually going to get a fill. So I know that, and I take that into consideration every time I place a trade. So I know that if I'm looking at a particular event, like a news event, economic data, and if I'm considering getting into a trade, I have to think to myself, well, I know that I have a lot of subscribers, and a lot of subscribers are going to be using different brokers. Taking that into consideration, that means they're all going to get a different fill. And I know that some brokers are freezing the price right at that moment, and I know that other brokers are widening the spread to some outrageous amount. So I stay away from trading news events. If I see that it's going to be a very volatile news event, I will stay away from trading that news event, because I don't want you to participate in a loss if you don't have to. It's possible that I could get into the trade on my platform, but if I'm trading during a news event, you might experience a loss even though I experience a winning trade. And I don't want that to happen to you. So again, I don't trade during volatile news events, but if I do get a signal either before or after the news, I will trade that technical signal, and it's almost in every case the news itself will move price to my targets. And that happened exactly the way I just described last night here on the pound yen. So I knew that there was some economic data that was going to be released at approximately 4:30 New York time on Wednesday for the UK, and I knew, and my expectation was that it was going to be more or less a negative number, but I knew that it was probably going to be a volatile trading event, and I knew I couldn't place the trade on the pound dollar. So what I did is I decided to trade the pound yen, because I got a perfect technical setup, and I'll review that with you. This was called an HL30. Here's what I'm really doing with an HL30. At the rollover period, this is, of course, that you're looking at right now in this window, this is Wednesday's price action. But what I do at the rollover period is I look for the day's high and low. Now you'll notice that price approached the previous day's high, and it has to come within a 10 pip range of that high. And once it does that, I wait for a reversal signal candle, and this was my reversal signal candle. That candle, that reversal candle, it developed before the economic data was released in the UK. So I knew I had a perfect signal, and I knew that I was going to experience less volatility, meaning that if I executed a trade with my trade copier on this pair, that you or anybody else who's using the trade copier was most likely going to get the same fill, because the economic data was not for the pound yen, it was for the pound, and it affected the pound, but I was able to get this trade before the economic data. And again, my expectations were that the economic data for the UK was probably going to be a pretty bad number, and in fact it actually was. So here was my technical trade. I wait for that reversal signal candle, I confirm this signal candle with my indicator, the CCI indicator here, and my entry was 156.19. Now I'm using a 40 pip target and a 40 pip stop. So right there you know that on a trade like this, I don't use more than a 40 pip stop. And on all of my trades, I don't use anything larger than a 55 pip stop. So that should give you an idea as far as what you can expect with the drawdown. Now, of course, the drawdown in a percentage factor really depends on the kind of leverage you're using. But if you're trying to get an idea of how many pips I lose on one trade, again, I only used a 40 pip stop loss on this trade. My maximum stop loss is only 55 pips. So in most of my trades, I get by with just trading and only using a 40 pip stop loss, and there really isn't much exposure of capital to the trade. So here's my entry on the close. Here's my first target, 155.79, and then again my stop was right up here at 155.59. So here's what happened after I got into the trade. It sort of went sideways as we anticipated and waited for the economic data. And when the economic data was delivered, it shot right through and hit my target and went even lower. It was perfect. This move happened so fast. I think within less than a minute it not only opened up and dropped, but it went right through my profit target and closed. Everyone made money, everyone made safe money, and again you'll see that the stop loss up here of 40 pips, it was never even really tested all that much. And in most cases, if I execute these trades correctly, that's what happens. I always use a stop loss. I never place a trade with an open-ended stop loss. I don't do that. I know that a lot of other signal providers do that, but I don't. I also, with my performance page, don't have any open trades that I just leave running for some indefinite period of time, hoping that if it's negative, it'll come back one day. I don't trade like that. I know that a lot of other traders do that, but I do not. I always use a stop loss. If my stop loss is hit, I can usually earn back the loss from that trade within the very next trade or two, because I simply wait for the next trading opportunity. I don't revenge trade. I don't jump in and out of the markets hoping to try to scalp back some of the losses. I just simply wait for the next trade, execute it just like I'm supposed to. It works. I make sure that you and everybody else that uses the trade copier will get the exact same fill. And again, I really have to be conscious about my decision, as I was today, for example, when I traded the pound dollar. I had a choice. I could either trade the pound dollar and try to jump in with the news, or I could trade the pound yen when it gave me this perfect signal long before the news, and then the news itself was actually what pushed price to my profit target. So we ended up with a total profit here of approximately 40 pips, and you can see again there wasn't very much drawdown even with this open trade, because it really didn't test that stop loss up here. So we sold this pair and earned 40 pips approximately, and that's just about how all of my trades work. I do have another trade that's a breakout trade, and sometimes when I trade the breakout trade, which this was not, by the way, but when I trade the breakout trade on the pound yen, I usually earn approximately 250 pips when it reaches its final target, but I only use a 55 pip stop loss. That's it. And I do that over and over. I've been using the same trading strategy since I developed it back in 2001. I started teaching it to people in my live chat room, my very first live chat room back in 2007, and I've been using this system, and it's been the same way with the same targets and the same stops ever since then. It doesn't change. It works, and it's all based on solid market principles, but it's worked through every market crisis: the global financial meltdown, the Syrian crisis, the European crisis, the FOMC tapering decision, everything that you can imagine. It always works the same way. You can use the trade copier and get the same results today. It's a very simple process to set up the trade copier program for you. All you have to do is click on a few buttons and then add your trading account, your MT4 account, to the trade copier, and it will automatically execute trades just as safe as the one I showed you today. And I always produce a profit. I never have a losing month, and I guarantee that every single month I will earn you at least 400 pips. Thanks for watching, and I look forward to trading for you.